Sunday, June 18th, 08:44 a.m. New York time. Good morning. Happy Father's Day. We have a holiday tomorrow in the United States, so the stock market will be closed. So we won't have a full trading week for the equity market, aka the stock market. The future markets will open Sunday evening, shut down a little while later, and reopen Monday evening. But the bonds and stocks won't be trading the Monday regular sessions. So again, short week. Let's do a top down. Well, I am doing a top down, and I will show you what I do on the S&P 500, the major U.S. stock index that most media, TV, radio, others choose not to include on their daily economic finance reports, even though if there might be 10 seconds, they usually just mention one or the other. Might be the Dow Jones or NASDAQ, not include the most reports. So here we're looking at the cash index. The cash index is the stock index of the S&P 500 that trades from 9:30 a.m. to 4 p.m. Then you have the futures we'll get to momentarily, but again, we look at the cash index. On the monthly chart, we're already past halfway through the month, but not done yet for the month. So this current green candle is not done yet. The momentum is up. We are bullish. Regardless what talking heads say, be it on TV, media, politicians, U.S. stock market is bullish. Individual stocks, that's a different story. Charts don't lie. Look at this. Here's the low of the year. This yellow horizontal line says 2023 year low. And we already broke above the high. So we have a new high. I'm not going to update this yet because I'll wait till this candle gets done because we may still go higher for the month. This is the high of last year right here. It says 2022 year high. This is a swing point. I have it labeled here, swing high 2022. So that's where there was a lot of sellers. And when we come up into that, that's a potential trade idea. That red zone, supply zone, seller supply zone, green demand buyer zone. Yep. Also labeled here a swing low, which is a key level swing low right here. So potential price levels to be situational awareness of less time, maybe in the social media of the personal photos, and maybe be situational aware of this as top priority, top down. But your choice, how you want to go forward. Looking on the weekly, which we just completed this weekly, look. Yeah, big green candle, huge trading range. Versus that prior week was a small green candle, small trading range. And most of this is a body in green. That's extremely bullish. Coming into here. Again, demand zone. Onto the daily. We're testing a midpoint. Let me zoom out more so you possibly see it. We'll put it back for, say, 3 years. It shouldn't be that long. There we go. So last year, that big candle, zoom out some more, right here, was a big bearish candle. So I drew midpoint, the middle of the candle, that gray horizontal line, looking for a potential retest. Remember, that was a key situation event that occurred. Yeah, impulse moving. So now, going forward, we're coming into that level. Go zoom in more. And Friday, we tested it. Did not close above it, but we had a big sell-off. Big sell-off meaning that, look at that huge red body. That's a bearish candle. And rejected it. But going forward, in hindsight, situation awareness, I had that labeled a long time ago. My Patreon members were aware of that. So one could have known to have a working order on to close, take profits when we tested it, or day trade, trade short. Got it. You might have to sit on hands and wait for a long time for something to play out, but there's many other these events. So now, big green candle, look for 50% potential retracement. Let me label that here on the daily. Since we're situation aware of these price levels, we don't know when it's going to occur. It certainly be best to label them and set alerts. Set alerts. Price alerts. Down here, this gray horizontal area is a gap. Yep, let's zoom in some more. So on that day when it closed, the next trading day it gapped up. There was no prices in between here on the cash market. Okay, that gap has not been filled yet neither. It's a very important area. So I have it labeled. At some point in the future, it may get filled. A lot to be aware of. And these down levels, all the way down here, these are panic areas. In the panic areas, in the demand zone, are often opportunities to use that thought process of being a contrarian, trading the opposite. The people that are afraid, the people are acting in panic, people are acting, as sheep, deer in the headlights. The better trader was the ones that bought here. So again, situation where this may occur again. Give you the opportunity if it occurs again to look to be buying here if it comes down in a way that justifies very clear, defined zone and price action to be buying. Same here. House maintenance. I'll take care of this later. Okay. Now we'll go into the futures market, S&P 500 futures market. One of the differences are the trading hours. Future markets have longer hours they trade. They open at what? Sunday night, New York time, 6 p.m. Yep. And they only close 1 hour a day, each day up till Friday, when they close Friday at 5 p.m. So again, this Sunday night, these were open. Same thing, monthly candle, look at that. Weekly candle. And this was a swing high. We broke above it. This is a key level to be situation awareness of. This, when it was a swing high, when it trended down, it became a supply zone of sellers. So when we came into it, this trend to the upside was coming into what? It was coming into a supply zone of sellers. We broke above it, closed above it. So now, situation awareness of if and when it comes back down to test this price level again, that might be a potential buying area. And then you look for that reverse that closes above it. Yep, that's on the weekly, but again, you take it down to the faster time frame. The drawings are on the weekly, but more the wiser, you take it down to the daily time frame when it tests this, and then you look for that potential entry. As well, these things I have labeled down here. Okay, now we're looking at the daily, same thing, just like the S&P 500 cash, red. We got bearish pin bar. So a potential retracement. Potential retracement. Do a Fibonacci. The start of the trend, which is the bottom for here, and the top of the trend. Again, the trend started down here, trend on up here, and look for a potential retracement. This Fibonacci is no longer valid. If we break above the high of this, break below the low of this, how to remove it? What I'm looking for is potential retracements to a Fibonacci level, the green horizontal line, 0.382, as well as the blue horizontal line, 0.618. 50% is not a Fibonacci level, but again, situation awareness, I do want to know if it comes to the middle of here. 0.382, if it only comes to that, and then reverses to the upside, high probability it breaks above that swing high. If it does a deep retracement to the blue horizontal line, 0.618, that means the probability is when it goes back up to retest, it shouldn't take out that high, but would be a potential reversal going lower. Now we're looking intraday on the futures, the 4-hour candles. Excuse me. This was Friday, that last 4-hour candle, big sell-off, closed below quarters. The red dotted line, horizontal line, 44.75. Dotted lines are the quarters ending in 75 and 25. The solid horizontal lines are 50s and double zeros. Big round numbers. Pay attention. I'm going to go over that, how there was a good trade that occurred. I'll show that on a faster time frame because, again, we'll get the 4-hour. Fastest time frame of that would be below that. So this was Monday. Let me zoom in some more. That prior close on Friday was here. And Sunday night, we gapped up. So that was that prior week's high right there, that blue horizontal line. Sunday night, we gapped up. Monday, that was the low of Monday. And that was the high of Monday. Again, bullish bias. The trend was up. That last 4-hour candle, extremely bullish. Big trading range. I label midpoint there. That midpoint, for me, situation awareness is, look at that. It occurred right there at quarters, 43.75. And then we had that retest of it right there. Bullish candle. Big wick tested it. Did not close in it or below it. Again, that was a bullish signal. One could have done what? Done bull put spreads down here with options. Bull put spreads is a credit spread. You're collecting income. Could have done them with options that expire the same day or that same week. Got it? But again, that was a key level to be aware of going for the week. And then what happened here? Wednesday, same thing. Federal Reserve made their policy. They paused on changing interest rates. Huge price range right here on that. Huge wick. Came down, did not test it, not close it. But when that got closed, showing bullish bias. One could have done again. Done bull put spreads just below here. That would expire this Friday. That expired already. Yep. Nice. Yeah, we have a retracement. So if it outright bought the stock when this occurred, or after it occurred, well, you would have been underwater because when you bought that stock, 50% chance win or lose. Well, 50% it went against you because, again, the stock went lower. But bull put spread options, using the right delta, the right location, below this demand zone of buyers was a good strategy. And then it occurred again, another opportunity. Look at this. This one occurred during pre-market hours. Well, if you have a brokerage account that lets you trade futures and lets you trade options in the futures, you could do one. You could either bought the future contracts or done the advanced option strategy. I mentioned here, bull put spreads. Either way, you need an account that lets you trade futures. Not everybody has those because they choose not to be situational awareness of good brokers and different exchanges. So when that occurred, look at that. It tested numbers, 4,400, closed above it. On the bottom of a trend, bullish pin bar, and then that huge candle, green body. Again, economic news came out to 8:30. Push that up. Nice. Took out that swing high. And then we have here a big dodgy candle, almost like a dragonfly up there at the top. Yep. Let's go into the hourly. Past week, Monday. Again, each of these are Monday, Tuesday, Wednesday, regular trading hours, Thursday morning, pre-market. Look at that, bullish pin bar. Zoom in some more. You had this Asian session sell-off, London session sell-off. It came down to the big round number, 4,400. Bullish pin bar, nice, close there. Again, one was expecting it to retest here. It did. That 4,400 big round number, lots of tests going around here. Nice. So that candle alone for a day trade, one could have done bull put spreads down here or bought the futures contract. It had a nice momentum to the upside. Again, if you're doing the futures contract, you could have moved the stop up under each low. Nice gains. That's a big paycheck for a lot of people. The amount of money that could be made there. And then we have, look at this, consolidation, tight trading range, Thursday night to Friday morning. Huge pop-up. Again, economic news came out at that time. That was the high of Friday. That was it. Took out that high of Thursday. High of Friday failed to close it, showing bearish bias. One could have done what up here? On top of that numbers, then both bear call spreads or doing the bearish futures. And it came down to big round numbers, 44.50. Prior demand zone. So could have done an iron condor, doing bear call spreads up here, bull put spreads down here with the cash or the futures options, or just done the individual contracts. And we'll take it a little further into today on the 15 minutes on Friday. So this was Thursday overnight during the Asian session. I labeled the low, tight consolidation. Excuse me. Then we have the London session here. Bigger trading range, more activity. Look at that first 15-minute candle. Bullish pin bar, went up, reverse, made a lower low. So it was a lot of volatility during the London session because the opening range, we took out the low and the opening range took out the high. And then when it closed here, coming into close, tight consolidation, sell-off, bullish pin bar again, creating new swing low. New York market currency section, the 8 a.m. Granted, this yellow section is the FOREX session, the New York 8 a.m. to 11, which overlaps the regular New York stock trading hours. Look at that. Let me change this a little bit darker. So big engulfing candle here on the green candle, which closed above the London high. Nice. Rallied up. Coming into the economic news, 8:30, excuse me. The other economic news is big impulse move up. New York session open, which ended up being the high of the day. Yep, the first 15-minute candle when the New York session was getting ready to open, popped, huge red candle, sell off. Look at that, a lot of activity, total reverse, like a pump and dump. The 9:15 to 9:30, the green candle, pumped it up 15 minutes before, and we opened up at 9:30, dump. Yep, interesting. A lot of price. So you see all these vertical lines. Let me put that on the 5 minutes. They were my scalping session.